This is Alan Bush with the Daily Financial Forecast for Thursday, May 3rd. Starting out with the stock index futures yesterday, just after the Fed released their statement following their two-day policy meeting, stock index futures firmed but quickly reversed and closed weak on reports that the U.S. may impose tariffs on Chinese telecommunications companies. Looks like there is a little bit of a follow-through move to the downside today. Also, we do have the U.S. delegation arriving in China today for talks on tariffs. The expectations, at least initially, appear to be a bit on the low side. Ultimately, though, I do think there will be some progress made. And also, I do believe longer term that when this progress is made, that we will start to see traders focusing more attention on the still low interest rate environment. That, of course, should be supportive to the indices. Moving over to the currencies, yesterday after the Fed statement, the dollar index came under a little pressure, but then quickly recovered, closing higher as traders believe that the Fed is extremely likely to raise rates at the June meeting. So all eyes are now focusing on the upcoming meeting on June 13th. Today we are seeing the euro currency a little bit lower as inflation numbers in the Eurozone coming in a bit on the weak side. Interest rate markets seeing a little bit better prices. Probability of a rate hike at the June 13th meeting now is almost 100%. The big controversy now, though, appears to be how many more rate hikes will we see from the Fed. Many analysts now still looking for a total of 3, some talking about 4. I'm still going to have to go with 3 rate hikes. My logic for this is that Europe and Asia are not in a position to raise interest rates anytime soon. The Eurozone probably with their slowing inflation numbers. The ECB not likely to raise until next year. Bank of England may not be able to raise until later this year. And the Bank of Japan is maybe years away from raising rates. So I don't think the Fed is going to want to be overly restrictive, with central banks elsewhere not likely to be very aggressive in their rate hikes. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.